I am going to kick it off to Danny, who is our lead moderator for the session. So Danny, thanks for being here, and thank you to all the panelists for being here.
Perfect. Thank you so much for having me today. Sydney, thank you so much for organizing and putting all this together, because it takes a lot. So appreciate all that you do behind the scenes and what you're doing today. So thank you so much on behalf of small businesses. So again, my name is Danny Martinez with Apex Business Consulting. Apex Business Consulting is centered around making business opportunities possible. We help our clients close the gap between their current state of business to that of their desired future state of business. And we do that through business development, business management, contract negotiation, and succession planning. And we like to work with our clients in a manner that brings out the best of them, and we call it the Apex Factor. So today I'm going to be moderating this session here, and I'm going to pass the mic down so that my panelists go ahead and introduce themselves, and then we'll take it from there. And first up is Eva Padilla.
Thank you. Apex Factor, I like that. My name is Eva Padilla, Energize Colorado. I'm the Capital Access Manager, and we are a business lender, business resources. We provide a business accelerator as well once you are approved. So we have many resources, many consultants on hand, at least more than 100 now that volunteer for our resources. How a lot of people know about us is that we did the grants during COVID, during 2020. So we realized that there was a high need of entrepreneurship and resources. And so we created a loan, a funding loan that goes along with the resources, goes along with the scaling up of your business. So when you're tapping into Energize, you're tapping into our network within the state, our network within the cities, civic. This is a huge need that Colorado sees, the huge potential of our Colorado entrepreneurs.
Hi, I'm Ryan Flanders. I'm the Director of Lending for Rocky Mountain Microfinance Institute. We're a nonprofit community development financial institution here in Denver. There's multiple CDFIs in Denver, and we've got a couple up here, so excited to talk with you more today.
Hey y'all, my name is Lindsay Vigoda. I am actually not a lender. I'm the only non-lender up here. I work for Small Business Majority. I know, right? I work for Small Business Majority. I'm the Colorado Director, and Small Business Majority is a national organization. We have offices a lot of different places, including right here, and we do research, education, and advocacy all around small businesses, particularly BIPOC, rural, and women-owned businesses, trying to uplift voices, trying to make sure that folks who have been historically and systemically left out of decision-making tables are represented. It's really bright up here, so I can't see a lot of y'all, but I just had a moment. I saw Beyonce earlier this summer, and I'm like, is this what she sees? Is this how bright her lights are? Because if Beyonce can do it, I can, right?
Hi, Mickey O'Neill from Sedge Finance. Sedge Finance is also a CDFI that does small business lending. I actually run our department that business support and impact. So I work with small businesses to strengthen them, both to help them be loan ready, and then also once their clients help them in whatever area of business they need to help them. Basically, I think a lot of what you're saying around trying to where they are now and then closing the gap to where they want to go.
Absolutely. Well, thank you so much, panelists. Today, we're just going to see if we can entertain a few questions regarding some of the challenges of the small businesses getting access to working capital. So I'm going to ask a series of questions of the panelists here. Feel free to chime in wherever you feel fit. So the first question is, what are the most common challenges that minority-owned businesses encounter when seeking capital, and how can these challenges be addressed effectively?
Go for it, Eva.
Yes. So I think the biggest thing is just preparation, just making sure that you have all the right documentation, making sure that you have don't be afraid to ask the right questions when you're speaking to a business lender. I work for Chase and JP Morgan, Bank of America, so I had to do the tough questions, and I would have to really probe. So the thing with a business owner, they jump off they jump off a cliff basically, and so I feel like if they have preparation and they have the right questions, then they can make it.
Yeah, I mean, I think there's a lot of different factors that can make it difficult for a small business to access good capital. So if you think like you're going to go to apply for a loan at a bank, what's the bank going to look for? They're going to look at like, your credit, your cash flow, your income, collateral you can offer, how long you've been in business, and in many of these areas, we see barriers. And so maybe your credit isn't in the best position, or you're just recently building credit, or you've been in business just for a little bit amount of time, or you're just starting so you don't have much of a history to demonstrate cash flow, or maybe you're just looking for a very small loan and the bank, their minimum loan is way more than you need. And so there's a need then for resources that can help small businesses in that earlier stage, businesses that are smaller scale or who've had challenges with credit or other financial reasons. And so a lot of us up here are seeking to fill some of those gaps for us. You know, we do that through a really kind of intensive and thorough business training and mentorship and education program that goes from the idea origination to launching your business and then helping your business thrive through educational programs, mentoring, and access to capital. And I'm sure we'll talk more about what that looks like.
Absolutely. Go ahead.
I think historically bank loans have been inaccessible for a lot of folks, but even pre-pandemic, we've seen the accessibility of bank loans, which a lot of businesses, it was their only lifeline for a very long time. They started decreasing and decreasing more and more, which is where our amazing community lenders stepped in. But we're still seeing that trend, and especially after COVID. Those traditional loans, when we think about small business lending, we think about the SBA and we think about bank loans, those are becoming less and less common, and there's a whole slew of reasons for that. But I think it's a really amazing opportunity, the fact that the federal government as well as our community organizations have started filling in the gap.
Yeah, I would echo everything that's been said. I think we are all the people up here are part of trying to address some of those barriers. So I think the traditional market does have, for small business owners in general, generally you have to have profit for a couple of years. You generally have to have collateral and a high credit score. And so those are all things that we actually now have loans of up to $50,000 collateral free. I don't think any of us up here have a minimum credit score. So those are definitely things that all of us are committed to addressing. But I do think there is also just that general making sure you have the preparation and clarity around, for example, what are you going to use this loan for? This is not free money. I think sometimes it feels like it, especially I was just talking about, we give so much help and support, and we're very much a nonprofit that we think, I was just talking with one of our loan officers, that we think that sometimes it makes it feel like it's a grant, which it's definitely not. We do work with our borrowers to make sure that they can pay, and we work with them when they have struggles. I mean, that's definitely a huge advantage of a nonprofit, is we will work with you through all of those. But I still think that means you want to still go into this with really eyes wide open and know very clearly what you're going to use the money for and how it's going to help your business and how it's actually going to transform, increase your profits or reduce your expenses, and have that very clear. Because I do think sometimes it's easy to think that money is the solution, and actually there's a lot more behind it than just that.
Absolutely. And I think Eva was alluding to this earlier in her previous comment, and some of the challenges. I think some of the small businesses are commingling their funds, and that is a big challenge for a lot of small businesses. They have a personal bank account, and then they open up a business, but they're still utilizing that personal bank account as their business. And you cannot do that, because when you come to the end of the year and you're filing taxes, you're going to run into some challenges. If you're trying to get a loan, you're going to run into some challenges. So what have you all seen in terms of that situation? Because I know you've come across that many times over. And what advice would you give a small business to help avoid that pitfall?
I was just talking about this in a presentation last night. It's something I do feel really strongly about, because I think people don't realize all the impact that commingling, because I think it's very natural as a small business owner. I've had this with people who, have training in this, have kind of, well, it's my money, it's my business. And so you can kind of just treat them as if, yeah, well, and that is true. It is, any money you make from your business is yours. But that doesn't mean you need to have it transparent of when that money, when you're withdrawing that money for your owner's draw is the technical term, right? Versus just if it's a mix of all of your expenses. There's a lot of reasons why that's problematic. And one of the things I've learned by working with a lot of business owners recently, it's kind of become clearer to me, is when you're mixing and commingling, I think the number one impact is it's really hard to understand what your business expenses are and if you're making money or not on your business. That's it. I mean, that at just a very practical level, when you're commingling, you probably don't have as good a handle on your business profit as you should. So just as a business manager, that's a huge reason why to keep it separate. And then the thing is I think this is not the best practice. The best practice is to pay yourself on a biweekly basis, transfer from your business account to your personal. That's the best practice. But you're going to sometimes need additional money that it's fine to transfer the money. That's fine. That's transparent. But when you're commingling, it's just very hard to track. And it can also get you into legal trouble. So yes, the legal aspect is real, but it's also just on a practical level, you should be keeping it as separate as possible.
And a quick clarifying point. It is technically your money per se, but it's also Uncle Sam's money as well. It's, you got to report to the federal government how much you made. So even though you took a draw on that money, you still have to report that, showcase that on your financials. So I just wanted to make sure that you all understand that just because it's in your bank account doesn't mean it's all 100% yours. Yes, a good majority of it is your money, but you still have to pay taxes on that money. Yeah.
And just, you probably, hopefully have a rock solid business, but things like COVID-19 hit. Yes. And the purpose of keeping your finances and your bank accounts separate is also to protect yourself. If your business, God forbid, goes under because of things in or out of your control, you want to make sure that you, your house, your home, your family are protected, and what happens in your business stays over there, and vice versa. You don't want, if something happens in your own family that affects your credit score, you want that to be separate from your business. So it does take extra work, it does take extra capacity, but it will pay off because, y'all, I didn't see the pandemic coming from a mile away, and that affected businesses, millions of businesses across our country, millions.
Can I add something on that?
Yeah.
So everybody registers in Colorado as an LLC, and you think that gives you protection, just like Lindsay was talking about. It actually doesn't. You actually have to act like an LLC. Mm-hmm. And the number one thing that they look for, there's other aspects also, but the number one thing they look for is no commingling.
Good point. Very good point. Go ahead. If you want to add some more, go for it.
Yeah, also from the practical point of view, it makes filing your taxes so much easier at the end of the year. If all of your personal and business expenses are just kind of clouded up in one account, like if you go to somebody to help them prepare your taxes, they're going to have a hard time figuring out what are the eligible business expenses to deduct from your business revenue before they calculate how much you owe in taxes. And also, if you ever get audited by the IRS, God forbid, having it clearly separated out will really help you justify your case for the legitimate business expenses that you declared.
Good point.
Yeah. Outside of the legal reasons, most importantly, as a lender, our job is to really present you strong, have that strong presentation. And if, for example, we're asking $50,000, $75,000, but you have everything on a personal bank account, an underwriter's not really going to go on each line to see which one is business, which one's personal. It's a really tasking, thing to do. But separating your business is not only legal, but it's also something that's going to help you scale up your business. It's going to help you understand your numbers of, what your growth is for that month or for that year.
Absolutely. And to another point that's very important, I want to bring this up. It's more of a scenario, and then we could talk about it in a little more detail. But a lot of small businesses are initially told, report losses, because you have to pay taxes on the money you make. So everybody seems like the first 1, 2, 3, 4 year, 5 years of business, a lot of these businesses are filing losses because they don't want to pay taxes on that money. But it's a catch-22 because later on, and albeit year 3, year 5, year 6, when they need to go take out a loan, they go to the lender and the lender's like, you don't show any income. The business didn't make any money. So now they're in a situation where they're trying to get access to that money, but the business does not demonstrate that they made money over the past couple of years. And they're typically looking for at least 1 to 2 years, maybe 3 years of positive cash flow because they want to make sure that they're going to put together a good loan. And the lenders are always mitigating their risks, right? They want to mitigate the risk. They want to give you the money, but they want to also mitigate the risk. That's a responsibility. That's their fiscal responsibility. So I wanted to just, I'm pretty sure y'all have some experience with this, but what is your input on this? Is there a certain time frame where like, okay, year 1, year 2, file losses, maybe year 3, you start reporting profit, or what is your experience in that going forward?
Well, as a banker, it's way different. When you're working for the big banks, they want to see that growth with your cash flow. As a CDFI, that's why you come to us. It's because we understand since COVID, things are a little bit different. Your cash flow may not be the full factor or the full picture, but we need to look at the other factors that we look at, such as, what are we doing on your projections? What are you doing if you're a startup, what's your business plan? But if you're an existing business, then, what is your preparation for this decline that you had? Do you have a plan, projections for this year? And obviously we take into consideration like collateral options, what kind of assets do you have available to bring more weight to the loan and also mitigating the risk for us.
Yeah, I always say, just kind of go straight up the middle, declare all your revenue, and claim all eligible expenses that you can, and it'll sort itself out. I mean, if you have to pay taxes on your profit, that means you have a profitable business, which is a good thing. Right. And if you have a successful, profitable business, like brag about it, have it on paper, like have an official record of like, look how kick-ass my business is, and that'll be a good thing. Not only for being able to have an easier time applying for a business loan in the future, but also it impacts you personally. So if you want to buy a house and you need to depend on your business revenue as a key source of income personally, your business profits as a key source of income personally to qualify for the mortgage, even though that's a personal loan, your mortgage lender has to see probably 2 years of business cash flow in order to count that cash flow as income that can be seen as a way to pay your mortgage. So I'd say from day one, just separate your personal and business accounts. If you can, get set up with something like QuickBooks and record everything, and then
just be transparent, right?
Just be transparent.
Just be transparent.
Yeah.
Good enough.
Bookkeeping, y'all. That's so important.
Yes.
Transparency is everything. And I also, you have the idea and the dreams of taking out like a $500,000 loan or whatever it may be. But if you're not true with yourself and not true with even the IRS about how much you're making, like how are you supposed to know what is feasible, how big of a loan you should be taking out, and what is healthy for your business? So I am of the idea that like while there are hella loopholes in our systems, and I'm sure accountants, I'm not one. This is not financial advice, I can't give that. I'm sure that there are a lot of things that could be beneficial for taking losses. I do think it would hurt a business in the end. So again, truth is probably your most powerful tool internally as well as externally.
Yeah, definitely agree with all that. We do, so in terms of actually getting a loan, we don't have any like hard fast, like you have to have shown positive cash flow for the last year or whatever. But we are looking at your projections and that you are going to have enough cash flow to after you pay yourself, and your all of your business expenses to pay our loan. I mean, that's at a fundamental level, that's what we're looking for. And if your projections are vastly different than your historical financials, you better have a really good explanation of why that's credible. Otherwise, you're not going to be able to get
we don't want to put you in that position. We don't want to put you in a position where you can't pay off this loan, right? That'll make you worse off than you were before, rather than really helping your business. I will say we do look beyond tax returns, because we do know that those aren't always the most relevant.
Yep.
But I do think, I echo, like, there's a lot of, everyone always thinks about the positive side of not necessarily paying taxes, but there are a lot of downsides, including, so the loans, Social Security later on when you want to retire,
Yep.
like all sorts of things that can really hurt you if you do not state that accurately.
So I think a best way to prevent that, right, is getting help from a consultant, a bookkeeper, an accountant, somebody who really understands the number, to prevent you from getting in that situation where you have to really explain yourself later on down the road when the IRS is knocking at your door asking you to justify the $1.2 million you didn't report in 2019, right? So we try to set those preventative measures so those small businesses do not run into those situations.
And if you're a very small business just getting started up, I recommend with your first expense signing up for Wave apps. It's
Yes.
free accounting, and it's pretty good for up until you really are at the point you need QuickBooks. I use it with a lot of my clients.
That is very true. You don't have to expend hundreds of dollars or thousands of dollars on QuickBooks, where you can basically do it at a free service. But later on, if you continue to scale and grow and your revenues are increasing, you obviously want to use some type of software out there that'll help put your books in alignment when it's time to file taxes and whatnot. So another one, personal credit score, FICO score. Let's talk about that. How important is that when it comes down to asking for money from a lender? Can I just come up to you and say, hey, Eva, I need $300,000. I'm good for it. Would you give me $300,000? Tell us a little bit about that, or whoever wants to start. Go ahead.
Yes, so Energize Colorado does not have a minimum credit score, so I'll start out with that. It's really unheard of in business lending, and because coming from Chase, you have to have that perfect credit score. But personal credit is essential, especially if you want to keep growing, if you want to keep asking for the bigger loans, if you're expanding, that's going to always, we personally ask for a personal guarantee. So that is something it's hugely essential.
Yeah, I agree. It's very important for life and business. Even though the person and the business finances are separate, they also impact each other greatly. And so, generally, in business lending, a personal credit score is an important part of the overall set of things that the lender is looking for. At our MMFI, we also don't have a minimum credit score. You don't have to have a credit score in order to start with us. We kind of start with an education program, especially our business launch boot camp. And during that, you're going to learn a lot about business and also about personal finance. And that will include reviewing and understanding your credit score with you. And then when you take out a loan with us, we do report that loan to your personal credit so that you can build a personal credit history alongside with building your business, because we see that will help provide more opportunities for your business and for you personally in the future, like that home buying example.
Excellent.
What they said. Small business majority also doesn't check personal credit, because again, we are not a lender. But I just wanted to say something.
So I already mentioned that we don't have a minimum credit score, but I do think it's important to, I imagine all of us do pull credit history, right? So that is actually important. I always try to make sure that people understand that that doesn't mean, just because we don't have a minimum credit score doesn't mean your credit history isn't important. What it does mean is that we have the flexibility to understand the context behind why you have that credit score. But that means if you have just default after default after default, you're probably not going to get a loan from us, because that shows that, but if you have shown you went through something and then you've are working on getting better, that's we're more than happy to work with you to help you continue to increase that score. But I do think it's important that even when folks say no minimum credit score, that doesn't generally, I think it's probably pretty rare that it means that it doesn't mean your credit history doesn't matter.
Correct. Very good. So how do the small businesses avoid predatory lending? Because they're out there, They've been around for many, many years, and a lot of small businesses fall into that trap.
And they're actually targeting, this is something I've learned from Small Business Majority, that they are, because you could actually speak to that. I'll let you speak to that part. But to me, it's especially if you don't have a great credit score, so well over 700, and it's easy for you to get credit, like it's quick and easy, it's probably predatory. If it feels too good to be true, it probably is. Our process, you may have a poor credit score and be able to get it, but it's not. Our process takes a while, and we're going to ask you a lot of questions, and we're going to get all this documentation, et cetera. So if you can get one overnight and your credit score is 500 something, it's probably predatory.
So Small Business Majority, we started off advocating on healthcare, but access to capital was our second biggest issue, and now our biggest issue we advocate on. I have a set of questions because this is something very near and dear to my heart, but also if you don't want to write this down, I have flyers over there that will go to our website. But there are a lot of questions you should be asking yourself, and a lot of questions you should be asking your lender when you're seeking any type of credit. And this is because as bank loans have gone down, predatory lending has gone up. And with the rise of internet loans, like you see it all the time, I'm sure. You get calls, you get emails as a business owner. Get this loan tomorrow and it'll have 0% interest rate. And in the fine print, it's like 200% APR. And so I'm going to say this out loud. Again, you don't need to write this down. It's on our website, venturize.org, which I will probably plug in later. But some questions to ask yourself before you even seek lending is, what do you need the money for? How much do you need? How long will it take for you to pay whatever it is back? Are you looking for a 6-month loan, a year loan, a 10-year loan? How long have you been in business? How much collateral do you have? How quickly do you need the money? The quicker you need the money, the more susceptible you are to predatory lending. And are you seeking debt or equity financing? Think about debt of like, I borrow $50,000 from SEDS. At the end of it, I'm going to pay $50,000 plus interest. Or equity is kind of that Shark Tank mentality from venture capitalists. Like, I don't know, for $100,000, you get 10% of my business. But this is the thing I am most passionate about. And these are the questions you should be asking your lender, and they should be able to answer it. The first question, the first question is, what is the interest rate, including AIR and APR? Are there any upfront fees? If so, where do they go? What are the payment amounts and frequencies? Like, you should know every month I'm paying X amount of dollars. That shouldn't be a surprise. Your lender should be able to work with you and tell you that. Are there any prepayment penalties? What is the full cost of the loan over its lifetime? So once you pay it off, if I'm paying off a $50,000 loan, is it going to be $55,000? Is it going to be $60,000? Or, and I've worked with business owners, is it going to be $500,000? That seems ridiculous, but it's very real. If you are refinancing, are there any fees being added to the existing principal? Is the lender imposing any deadlines for accepting the loan? A lot of lenders, especially predatory lenders, will say, oh my gosh, this offer ends in 12 hours, thinking, this person isn't going to read the fine print. They're not going to read the contract, hoping if they put a lot of pressure on you that they're going to be signing immediately. So if your lender is putting a ton of pressure on you to sign immediately, big red flag. And the last one is, if you're going through a broker, is that broker disclosing their fees and their conflicts of interest? So those are questions you should be asking yourself, your lender. Again, predatory lending, I've been talking a lot, but that is something so very important to me because it's the rise, especially in the COVID-19 pandemic, it's horrifying, honestly, as business owners. I've seen a lot of amazing businesses be completely bankrupt by them. So beware, but also just be informed, be empowered.
Sorry. Just building, one of the things I've seen with a few clients recently, when I've been who have gotten predatory loans is those loans say they have no prepayment penalties, but they really do. They put the whole cost of all the interest up front as a fee, and then you have to basically pay all that if you pay off early. So I don't know if it's asking a little probing on the what happens if I prepay. That might be a way, because I think those folks will say, no, we have no prepayment penalty, when really there's a pretty big prepayment penalty.
Yeah, I'm very passionate about this as well. Like Lindsay said, definitely check out their website. Also look up the Small Business Borrower's Bill of Rights, which has some good information as well.
That's where all the questions come from.
There you go.
Good job, Lindsay.
Yes. And also, finance and financial concepts can seem scary and daunting, but take a little time. You can learn them. Take a little time to learn some basic information about interest rates, for example, and how they're calculated. Because there's a lot of different ways that interest can be calculated that can really impact how expensive that loan is. For example, a fixed rate versus a variable rate, or an annual rate versus a monthly rate. So an example I always think of is one time I was driving and I saw on the back of a bus an advertisement for loans. It said loans, 10% loans. Like, that sounds pretty reasonable. That's less than a credit card. But then when you drive a little closer, you see the fine print. It says 10% monthly rate. And so what that means, 10% monthly rate times 12 months in a year, that's actually 120% annual interest rate. So that's a totally different story than a 10% annual interest rate. So it's just kind of one example. Just be thoughtful, do research, ask questions, and you've probably gotten spam as soon as you registered your business.
I think you're ready to be a lender. Well, I think it's just understanding the need. Like, if you're needing that right away, yes, I can understand why you had to take that. But a business loan is just one of the hardest loans to get approved for in the traditional world. In the CDFI world, it's definitely a much more flexible avenue. So it's very common, unfortunately. Sometimes they feel like I'm a predatory lender, but it's just like, we do a whole presentation. It takes up to 30 days for an actual decision on your loan. If you're getting it in 24 hours, then just take it what it is. It's just that quick review. But it's really understanding what your need is. Is it a credit card? Is it a line of credit? Is it an actual fixed payment, like a long-term loan? So I think it's understanding your need, but never going to a predatory loan. I'm not supporting them at all. I've actually taken a predatory loan, and it was just when I was younger, but it was a need. I needed it at that time. It did its course, and I paid it off right away.
Go for it, Ryan.
Yeah. So there are federal regulations and state regulations that govern a lot of consumer loans, so personal loans. But there are fewer regulations that govern business loans or commercial loans. So a big example, or common example, is the Truth in Lending Act, which covers personal loans and imposes requirements on lenders to disclose things like APR and other things in an upfront manner. But those regulations don't currently apply to business loans. And so business lenders, like these online lenders we're talking about, can get away with a lot more by kind of being tricky on how they define their costs or their fees or their rates. So there is kind of in the theme of our policy and our pitch fest later, there is movement at the national level to try to have a truth in lending for small businesses, or truth in lending for business loans. Search that, take a look at it, learn more about it, and advocate.
And speaking of advocacy against small business majority, we are an advocacy organization. The Truth in Lending Act in California passed to protect small businesses. That is the only state. It has been killed many times on the congressional level in DC. But it is something Small Business Majority has been spearheading. If you have a story, this is my plug, if you want to share your voice, please come talk to me. We are constantly working with Congress to get a Truth in Lending Act passed so we can protect our small businesses. Because consumers are protected, Us as business owners are protected under consumer loans, but not as small businesses, and that needs to change. So advocacy.
Very good point. So the takeaway here is pretty much, well, read the fine print. Do not do a loan within 24 hours. Make sure that you understand why you're getting the loan in the first place. You just don't get a loan for $300,000 just because you get money. That doesn't make sense. You have to be able to justify what are you going to spend that money on and how you get a return on that investment. The whole purpose of getting a loan is not just to pay your bills. The purpose is to help scale and grow your business. If it's paying for employee salaries, it's paying for materials, supplies, rent, that's fine because it's business operations. But just don't take out a loan just because you can get a loan for $200,000, $300,000. So read the fine print. Careful when they start pulling your credit because a lot of them let's pull your credit, and then they feel obligated. Now that they pull my credit, okay, now I'm obligated to go this route. I mean, if you do get caught up in a situation, you don't have to. Granted, it's not the best thing to do because you don't want points taken off your credit score, but if it's going to protect you from getting into a high interest rate loan, then lay off of it. Do not do it. Hold your time and just talk about it with the friend or consultant or somebody who understands the lending world. And we're here as resources, and that's why we're putting this program on. So how do small businesses build a better or strong financial foundation, creditworthiness, to enhance their chances of getting a loan? What can they do? The precursor to asking for a loan. What can small businesses do?
We'll just kind of share the pathway through RMMFI and how our programs kind of help with a really intentional structure in that process. So we offer training and mentorship in the idea, the launch, and the thrive phases of your business. And so we encourage entrepreneurs interested in our pathway to really first focus on what is your idea, and is this idea feasible, and can you make money from it? And then after you test that, you decide to invest more funding. You can then launch that business and continue to grow it. And we'll help work with you in that through our Business Launch Bootcamp. And then we have small loans that are available after you complete different phases of our program. So all that to say, I think that journey of really thoughtfully testing and validating what you want to do. Is this a feasible plan? And testing it in real life. Can I make money, and do my costs make sense and my price is right so that it can be profitable? And as you do that, from day one, really document your revenues and your expenses so that you know that you're profitable and can then, like we were talking before, verify it and prove it to a lender and to yourself. So if you have those foundations in place, you're in a better position to not only pay the loan, but also know the most strategic area to invest the funds. And also understanding your personal budget so that you know what that backup plan is, because a loan, there is risk with a loan. The lender provides the loan to you and they take on risk, but you also take on that risk, and ultimately at the end of the day it's your investment. And so if things don't go as planned, do you know what your fallback plan is? A lot of thoughtful reflection. Also understand your credit. Is there any other things out there that could collections that could still kind of hound at you, or any past tax issues that could, like if the IRS comes and you've built your business up well, but you haven't been filing your taxes, and then you get hit with a lien, that could be, put a roadblock in your way. So yeah, that process of testing, seeking mentorship, and asking questions. It's never too early to talk with a lender. I think a lot of people might self-select out and think I can't qualify anywhere. But if you reach out and you talk, then you can understand and you can, collaborate with your lender.
Perfect. Anybody want to add to that? Go ahead.
Well, I think as a mission-based lender, it's just really understanding what stage of the business are you at. Or if you're a startup, just understand that we'll need the business plan, the projections, your financials. If you're an existing business, what are the historicals? Did you file your taxes this year? And do you have an updated profit and loss? So I think it's, once again, what is your presentation? My job is to really get you prepared and have a great presentation. But our motto is if we say no right now, we can always say yes later. I'm gonna get you there. It's just a matter of understanding what do you need. And a lot of the business owners, they have that that fear of asking. They don't, but you just got to ask. You have to ask the right questions and just come to us.
Beautiful. Go ahead.
And there's the 5 C's of credit worthiness. I wrote them down because I don't have my computer in front of me. It's character, so your history of repayment and what that looks like. Your cash flow, so what revenues do you have to repay said loan? The capital, how much money do you have to personally invest in your business? Collateral, which is, again, property or assets as security for the lender. And lastly, what are the conditions? Like, what outside factors, including your industry, are going into play? Or again, something like a pandemic. I've said it so many times and I hate that, but it is on the top of mind for a lot of small business ecosystem folks.
I really wanted to reiterate some of what Ryan was saying. Is when I work with clients or potential clients, well, he said that it's never too early to talk to a lender. So I think that's really important. And I think, just so you understand, even if you don't even think you want a $1,000 loan until next year, at least you can start to build that pathway. But also, you may not be, it's very, very rare that a $100,000 plus loan is right for a startup, right? There are, occasional, if you're gonna open a restaurant, that needs a huge capital investment. But for the vast majority of businesses, I really recommend those small steps forward of if I have a $4,000, I can make a investment in some enough inventory that will let me know if this is going to be catch on in the market, if people like my product, or whatever, or I can develop a prototype, or I can do, and it's almost always like, what's the right next step? You could come in for a $5,000, and then a year from now you're ready for a $20,000. And I think really understanding that, but you also have to have very good financials so that you understand how you're performing, you understand that you're ready for the next step, and you can prove it to your lender.
Excellent point, because I think that's a good transition to my next question. What does the role of mentorship and networking play in helping small minority-owned businesses to get potential investors or lenders? Right? How does that work out? I mean, if you talk to another small business that's been through the same situation, get their advice, learn best practices, or what did they do wrong to avoid those pitfalls that they went down the road? So I guess just the question is, like, how does networking and mentorship in this world of lending help a small business going forward to make the right decisions?
I was going to answer that not about lending, because I do think it is helpful for you to learn from other people, like the mistakes they've made or the things they've done right. But for us, it's not going to be, you could come to us. You don't have to be well connected to get a loan from us. But I do think networking and connections within the small business community can just help you with so many things that I think I started an organization. And as an entrepreneur, one of the things that I found that was fairly overwhelming is I suddenly had to know how to do everything, right? And any one thing wasn't that difficult, but I had 50 of those things. And so just having somebody who can tell you, oh, this is that system I used, or this is what I learned here, so that you're not trying to learn everything. Because even no matter how smart and talented and hardworking you are, when you suddenly have to be an expert at 50 different things, is very hard. And I think that's where networks can really help, because they can really help you navigate that and learn from other people.
Beautiful. Very well said.
And I think also networking and the idea of information sharing, a lot of folks don't know what CDFIs are and what they've historically done for our communities. And so even right now, y'all are technically networking, information gathering, and this is really important and empowering. But also, in the same vein, sign up for all the newsletters you can get. Sign up for the Office of Economic Development and International Trade, the Minority Business Office, ARM-MFI's newsletter, Energize Colorado, SED's finance newsletters. You're going to learn, and not only sign up for them, but take a moment just to sift through, even if it's 30 seconds, even if it's 20 seconds on your way to walk your dog or whatever it might be, you're going to learn about resources that you might have never thought of, or grant programs or loan programs through the state. So networking, but also just sign up for newsletters. I think that's where even I, as a small business advocate, learn my most valuable information to hand off to other entrepreneurs.
Yeah, and mentorship, not only just for being able to find information or find referrals, recommendations for lending, but just for helping your business grow. At RMMFI, one of our values is we talk about capital meets capacity. So what that means is that a loan by itself is just a loan. It's just a transaction with a piece of paper and a commitment and money that you're given and that you repay back. And so it's just a tool to help your business. But there's so many other things that supports a business journey. Education's one of those, and mentorship is another one. And so we really believe in that a lot. So in our programs, we have mentorship that's integrated with our educational programming. So when you go through our boot camp program, you'll be paired with 2 or 3 mentors that'll help you along the way. And then you can continue to work with mentors through the life of your business to help you strengthen your business and make good decisions, help you in that testing and validation process, help you figure out the path that you want to take to growth. And all of that preparation will help you be more prepared to access a loan and to use a loan in a way that's going to be a good fit for you.
Thank you. Mentorship is very important. We have a business accelerator, and it's something that you get assigned an actual consultant like myself to help scale up your business. So we truly understand the need for the knowledge and the research of what it is after you get the loan. Okay, what do I do about my marketing? What do I do about just getting more clients to come in? So we have consultants over 100 that have expertise in that area. So mentorship is huge, and that's just something that is a need as well. Beautiful.
So we have about 30 minutes left in this presentation. So I wanted to open up, because we have some more questions to ask the panelists, but I wanted to open up to the audience. Are there any questions that you guys may have right now that you want to talk about and get answered?
Thank you. So what do these lending institutions do if you have recognized profit in your business, didn't pay taxes on them, and so I have, I'm paying back taxes, I filed on time and everything, and so I'm kind of curious, how do you take that into consideration? Because obviously there's a history of profits, 2 years in a row, yay. Let's celebrate that win. And I'm in a position where I actually had to take a year off of my business due to some significant personal things. And now I'm coming back into my business and I'm exploring getting some capital. I actually in 2020 got a loan from B-Side Capital. So super grateful for the work that they do because it really helped get my business to a great place because I started in October 2019. So I didn't qualify for any of the things that the government put in place. So it's kind of a layered question, but curious to understand the back tax implication, how you take that into consideration. I'm making payments on time, but I'm kind of curious how that might impact my ability to get an additional loan.
Well, that's a huge win for you. Yes. So congratulations on that. And I think for your question is if you're paying for the back taxes and you have a payment plan. With us, we see that if you have a payment plan, that's great. You're on the way up. We're going to look at your historicals. We're not really looking at 2020. We know that was a horrible year, but we are looking at 2019, 2021, and 2022, and obviously this year. So if you're coming back as an existing business, I really would like to see what your projections are now that you're coming back. What is your business model going to look like? What is changing? And if you have any projections on that, even creating or updating your business plan is also shows that you're business savvy and hey, I had this problem, but I've paid it. And now I'm back on track and I want to get back to get my business active. So in a CDFI, we see our lens are way different than a traditional lender. We see all of the challenges. So congratulations again.
So yeah, the back taxes would be okay with us. All it would do is just be another line in your in the cash flow projections that we would, factor that in, that you have to pay that before the loan. But it wouldn't like negate like, oh, we can't give you a loan or anything. In terms of, I think in general, it's hard when projections, either you're a startup or you are projecting significantly different than where you are right now. But I think the thing that I just tell folks is make your case, provide your evidence for why this is credible. The one thing that I see from people is sometimes with business plans, if they've done anything that are like more case competition type stuff, or like equity, done something that was put together business plans that clearly were thinking about equity, is they have these wildly crazy projections. That's the exact opposite of what we want to see. So it really just needs to be grounded in evidence. So what that evidence is it's easy if you already have that profit. That's easy. But if you don't, figure out the best way to have me believe it. And that can look different for different businesses. There's not one rule you need to follow. You just, does that kind of you just make your case and provide that evidence in whatever way you can.
Perfect. Any other questions out there, or any other comments on that topic that we want to clarify? Anybody? Go ahead.
I don't actually have a question, but it's sort of a celebration or like a success story. So when I started my business, I didn't have Wave apps or QuickBooks or anything like that. And then the pandemic happened, and there were all these like opportunities through B-Side Capital, and they were like, you need to give us a P&L, you need to show us all the things, and I was so overwhelmed. And I ended up having somebody through my networks that I was chatting with, and they were like, it's not that hard to go backwards, because I started in October 2019, I think this was in May or something, and she's like, I will help you categorize your stuff, right? Because if you're early in your business, like, it's not like you have like years and years and years to have to go backwards through. And that person helped me. They sat with me. They didn't just do it for me. They sat with me because I wanted to learn it and feel that I was like empowered and understood what it was that they were categorizing. And they spent maybe like 4 hours with me. And it literally is what helped me get a $15,000 loan. So like the networking is really important, like not thinking, oh, I can't do this because I haven't been doing it. Like don't do it by yourself. Like reach out to people. Wave apps is the best tool that I've ever like used in my business thus far, and it helps you feel empowered about your numbers. So I just wanted to kind of like put that plug in there that like even if you're overwhelmed by it all, or you're like, oh, I didn't do it, like don't let that stop you. Like find somebody in your network, or invest a couple $100s to have a person to help you, because it like the return on that investment, like 15, I was like literally was in tears when I got that letter, and I called her. I was like, this is because you took time out of your life to help me with this stuff. And then it empowered me. It was like the power of doing the numbers regularly, maybe not every week. I'm like a once a month kind of person, but the system makes it easy.
Absolutely. And to that point, that's a very good point. It's okay to spend a few dollars to help out your business. It's okay to raise your hand and say, I don't know, I'm lost, I'm confused, I need help in the situation. It'll save you time, energy, frustration, anxiety, headaches, non-sleeping, all that, to get some answers from an accountant, bookkeeper, a consultant, somebody who understands the business and can give you active advice to help your business continue to stay in operation. Because if not, you're going to pay tenfold on that. I tell a lot of my clients, you need a consultant and an attorney before you need a consultant and an attorney. Because when you do, that means you're already in the hole, and it's going to cost you 5 times the amount that you normally would pay in the average going market. So that being said, I'm going to go on to the next question here for the panel. In the digital age, as we are right now, how can technology and online platforms be utilized to bridge the gap to access to working capital for small minority and women-owned businesses? Anybody?
I'm going to plug in. Small Business Majority has a platform called ventureize.org, And that's where I got all these questions. Same with the Small Business Borrowers Bill of Rights. But a platform like Venturize, it's a hub to help you get loan ready, answer the questions you might have. And there's a lot of platforms out there. Of course, I'm biased. My organization has Venturize. But for the sake of transparency, there's also platforms like Hello Alice and a couple of others that have tools to help you feel empowered to be loan ready. And these are online platforms also that have boards, and there are a lot of business owners out there who want to share their knowledge. And again, with online, I can't stress enough, that's also where a lot of predatory lenders live. So there's the good where you have information sharing, and then there's the folks who are trying to exploit really great entrepreneurs like yourself. So the good with the bad.
We good on that? Okay. The next question. What advice would you give to minority entrepreneurs who are considering alternative financing options such as crowdfunding or microloans? What are the pros and cons of those two approaches? Crowdfunding, microloans?
Where, I mean, a microloan would be anything less than $100,000. So, we definitely fall into that as a CDFI. Crowdfunding, I think go for it. Like, you go to all those business pitches and whatever you can get, wherever room you can get into and where funding is available, apply. Like what she said, sign up on all the newsletters, especially the state grant newsletters. Those are the ones that will tell you nationwide grants that are specific if you're a veteran, if you're a woman-owned, if you're a BIPOC-owned. There's so many grants and funding opportunities. So I think for me, take advantage of both crowdfunding and microloans is basically was set up for a startup, basically, or an expansion, or something that if you're needing working capital. If you're needing a higher loan than $100,000, that means you're definitely involving into a major project sometimes with more partners and more organizations that may require more requirements from a lender.
Technically, microloans can be anything under 100 or under 50,000. For us, our average loan is about $3,000, and so I think there can be a lot of power. And I think Mickey was saying this earlier about starting with something that's small and manageable that you know that you can repay, that gives you the resources to start actually operating your business and testing it in real time and implementing new strategies, and then growing according to that capacity. Because taking out, even a $50,000 loan from day one, if all of those pieces aren't in place, it could be quite risky. If your business doesn't end up working, or you decide in a year, actually, I don't like this, you still have that loan to pay. But if you start with something smaller, and your business model is aligned with where something smaller can be impactful for you, then you have a good opportunity to repay that, even if some of your plans change. And then also, like what Mickey said, you pay off that first one, you kind of have that confidence, and you have more information, and then you can have kind of a more strategic direction to take that next big step.
I think with crowdfunding specifically, if you have a very robust community, I think that's often a really good tool. If you have a product, you see crowdfunding on Kickstarter, Indiegogo. If you have a product that's innovative, those are some really great platforms to use. I also want to plug a great partner in Colorado called Kiva. They are a crowdfunding lender. You kind of have to prove yourself that you have a community to back it up, and then they'll put you and your business, even if it's not a product, put you and your business on their platform, and you'll get crowdfunding sources from all over the globe. They're very mission-based. If you haven't heard of them, Kiva, Kiva. I'm not sure Mike O'Donnell did they go under a new name, or is it still Kiva?
I think it's still under Kiva. It's associated with Prairie Rose.
Prairie Rose, okay,
it's not, it's under Kiva Denver.
Yeah, but Kiva Denver, really amazing way to do some community-based crowdfunding. And again, it starts off with you crowdfunding your community to prove that folks believe in you, and then it can go pretty far from there. So check it out if you haven't.
Yeah, I was basically going to mention them because I do think crowdfunding like Kickstarter, et cetera, can be great if that's a good fit for you. But I think it can be really hard to do those successfully. And it's honestly, I wouldn't know how to do it. I wouldn't be prepared to do something like that. So I do think for many people who are good about telling their story and have that community, it can be really perfect. Kiva Denver, which is nice. So it's actually a crowdfunded 0% loan. So it is a loan versus Kickstarter and stuff. You're usually giving them a product or something. But the nice thing is so it's loans up to $15,000. They're 0%. But you do need to have some community support, but it's very accessible, even if you don't come from like a wealthy community, because you have, I think, I might be wrong, but these are roughly, you need to have like 25 people give loans of up to like at least $25 or something. So it's pretty accessible. So it's not some overwhelming level of support that you need to have. So I really recommend it. I think it's great.
Great. Well, I think one of the safest loans is to borrow from yourself, right? It's your own money. You don't charge yourself interest rate unless you want to. But I think you need to have some stake in the game, right? In order to be a business owner, you have to have some skin in the game. What does that mean? Obviously your time, treasure, and talent, but also your own money, and banks and lenders want to say, well, you're asking for $100,000. Well, what's your portion of this $100,000? Are you going to pony up $5,000, $10,000, or $25,000? So if you save that money and now you're ready to invest it, I think that goes a long ways with the lenders. They say, all right, this person's going to meet me halfway. They want a $20,000 loan. They have $10,000. Okay, I like that. It shows that they have grit. It shows they have determination. It shows that they're fully on in with their business. So that is key for a lot of these lenders up here that really want to see the small businesses play into that as well. So I just want to share, I was going to ask you all a quick story, like a success story, but I have one off the top of my head that I want to share with the team here and you all. Is I was working with a small business. She's a cleaning service company, okay? She was looking for $50,000. I said, okay, show me your books. She came over to my office and she brought me all her books, and they're on paper. Pencil, number 2 pencil. And she had all these entries. And I was like, that looks great. I mean, if this is 1982, you'd be perfect. You'd be right in line. You could walk up and they'll give you a loan right off that. And I told her, I was like, Sandra, you need to put this in a digital format. You know what I'm saying? You have to put this in digital. It took a lot of work, a lot of explaining, a lot of coaching, a lot of guidance. But she was able to put that paper documentation of all the years that she had and put it on in a digital format, and they're able to go through and actually get a loan. So she got it for $60,000. She wanted $50,000, she got $60,000. So what I'm saying is that it's possible. You can still do it. Don't give up. There's always opportunities out there to improve yourself, improve your business. So, if you're one of those old school people that do it on paper, that's fine. If that makes you comfortable, that's okay. But now in today's world, it's all digital, right? They're signing documents via DocuSign. They're PDFing stuff. So if you're not there in the digital world, you need to play catch up, because that's where things are going right now. Sometimes you don't even see your loan officer or your lender. All you do is see it via email. You may have a phone call, but for the most part, they're to send you documents back and forth. You're signing them electronically. You're PDFing those documents, and that's what they take, right? So I think that is a very important that the small businesses understand the wave of technology and how that's really impacting small businesses. So if you guys wanted to say a few things, maybe a quick success story or tips of advice, and then we can kind of wrap it up. Anybody want to share a few things? Eva has a quick little story, and then we'll wrap it up here.
Well, I think the tips will be preparation for sure, making sure you do all the research, ask all the right questions. She found a whole list. And I think as a lender, it's just building that relationship, even though it may be a virtual relationship, it's having that communication with your lender, understanding that lender has to understand what your need is, so that way they can present your loan to the underwriter strongly. So the best thing is to make sure that you know what loan amount. Sometimes I have a startup, asking for $100,000, and they just are not thinking about the scaling up. It's taking a big bite in that first year is very hard. You want that much debt on that first year. So my advice is truly think of that loan amount that's really going to maximize your business during that period. Our loan is up to $75,000, 3-year term. Interest rates are from 3.9 up to 8.5. So we want to be in that space where you can afford your payment. So I think it's just being knowledgeable, tapping into your networks, and definitely asking the right questions.
Yeah, I'd say you don't have to be alone in business. So things like you're doing today, joining a community, learning, find other communities to plug into. I think, I always just think about our boot camp and how much not only, the classes are great, the mentors are great, but so many entrepreneurs say that the best thing was just being with other entrepreneurs and learning from each other and supporting each other. And seek and build relationships and kind of settle into your business and build those relationships for the long haul. At RMMFI, we want to work with you over many years through the life of your business. And so thinking of a success story, I'm just kind of thinking of one entrepreneur who did our boot camp 2018, 2019, had been a truck driver and wanted to start being a broker as a truck driver. Well, not as a driver, wanted to be a broker for loads. Took a small loan out, $2,500, operated that business model. COVID was a big challenge on it. He kind of wound it down, finished paying the loan off, and in the meantime, pivoted, did some driving for Uber, did a truck rental to do driving for Amazon, saved up money, and was able to eventually buy his first box truck, a little older model. Got it going, came back to us, we were able to do our next level loan, a Thrive loan, to help with some operating expenses for that first year. Paid that off, came back, saved up those profits, was able to buy his first semi-truck, and we were able to do a bigger loan to support that purchase. So, that's a 3-4 year journey. And so, yeah, find your community, find your people.
Great story.
Yeah, going off of what Ryan said, just community is power. It's everything. So utilize it. If you don't know where to start, there's 4 amazing folks, not myself included. Well, maybe me, whatever. There's a lot of folks in this room. There's a lot of folks running this entire session who are based in community. If you don't know where to start, please ask. Because the small business ecosystem is intimidating, it's big, there's a lot to it, but there also is a lot of beauty within it. So we're here.
Yeah, I think that's very well said. And I think Eva said, get to know your lender. When you're going through that underwriting process, being transparent with them can build a lot of trust. We're a character-based lender, which means we really do want to get to know you and we want to be able to trust you. And so be transparent. And we can then also help you. I am very happy to help you try to figure out what the right loan amount is. I would say also just one thing there is go to a loan calculator online and you should feel comfortable paying what you can make an estimate of what your monthly loan payment is. You should feel comfortable with making that tomorrow. If not, it may be too much of a loan for you. But I think we even with our actual customers, if you're struggling, we will work with you. We will modify your loan. We will do, as long as you're communicating with us, we will work with you. It's only when you stop communicating that we end up charging you off or going down another path. A very quick story. So I worked with an immigrant who started his own security business, and it was very successful in his first year, but he came to us. He wanted to expand, I think was looking for like an $80,000 type, and then we were looking at but he was having a lot of cash flow issues because his clients weren't paying him, right? They were taking 3 months to pay him. So it was like, and he hadn't paid his contractors. So he said, let's get you a loan right now for $20,000 because I don't think you're ready for that $80,000. But so we went through that process, got him that, and now we're working on that, his package, because he's a very good, successful business owner, and I think he really has some great plans for expansion. So hopefully in the next month or two, he's going to be then coming back for that much larger loan, and he's, I think, ready for it now.
Great story. Well, I just want to thank you all. Before I close it out, I do want to explain what this QR code is up here. You guys have been looking at it all afternoon. It's called CLIMBER, and it stands for Colorado Loans to Increase Main Street Business Economic Recovery. It was created by House Bill 20-1413. It was created during the pandemic to help out those small businesses that were impacted by the pandemic. Our loan terms are anywhere from basically up to 10 years, starting out at a 2.5 interest rate. You need to be 1 employee up to 99 employees. And 50% of your employees must be working here in Colorado. And we're basically looking for small businesses that can demonstrate credit worthiness. We're looking for 3 years of financials. We want to know a little bit more about your business, income statements, balance sheets, and some basic particulars there. My job as a representative for the state of Colorado is to work with those small businesses. So my services to the small business community is free. You get me as a consultant. I will walk you through the process. I'll help you get the information. And once I review your information, I then get you over to Energize Colorado, is one of our lenders that just came on board. They specialize in loans that are $75,000 or less. Very good turnaround time. Eva is bilingual, English and Spanish, so she can entertain your questions. She's your consultant internally. She works with me. We work together as a team to help the small businesses get access to that working capital. So please look at us online here at www.apexbusinessconsulting.com. And then I would be remiss if I didn't talk about another program that I'm doing with the Minority Business Office. We just finalized a program to help small businesses get access to working capital in terms of a grant. So right now, the program that we're working on right now is if you're a small business owner and you need a website for your business, you can get your website essentially for free through a grant program through the Minority Business Office. So on that end, you can come to Apex. Apex will do your website for you, invoice you, you pay for the services, then you take that invoice along with taking 3 classes through the Minority Business Office, and then once you complete those classes, you qualify to get a grant for up to $1,200. So essentially, it's a free website for $1,200. You just got to pay for it up front, but at the same time, you get the grant back in terms of a grant to pay for that money. So again, I just want to thank you all for participating, my panelists. Thank you so much, Eva. Thank you so much, Ryan. Thank you so much, Lindsay. Thank you so much, Mickey, for participating in this panel discussion. Access to working capital is so important, especially nowadays after the pandemic. We've experienced a lot of challenges. The struggle is real. I hear the challenge of the small business on a day-to-day basis, why they're struggling, what happened, why they didn't get qualified for a loan. And on the opposite end, I hear some of the success stories. Businesses are still thriving. They are making it. They are getting that money. They're getting that access to working capital, and they're reinvesting that back into their business in terms of, employee wages, retrofitting their business for safe distancing. They're paying for supplies, materials, whatever it is for their business to make them successful. So if you're a small business owner, you're not alone out there. There's a room full of resources for you all. So please feel free to reach out to us because we're here to help you out. So my last thing I want to leave with you is that we are all in this pandemic together, and it's going to take a collective group to get us out of this hole that we're still in. So keep on believing in yourself, believe in your business partner, believe in your other small businesses, and continue support small businesses. Support the BIPOC community and the small businesses. So thank you for your time. Thank you, panelists. We appreciate you all. Thank you so much.